Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculptured Pico by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Pries.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Well, we wrapped up yesterday with the solid execution and the market rewarded patience. Coming into the final session of the week and heading into a long holiday weekend, the structure this morning is setting up something I really like. This breakout pullback has the potential to be a meaningful payday if we stay disciplined and let the market do the work. What stands out immediately is the presence of two very different ranges working together. The larger dominant range gives us direction, context, and tells us where the market is likely heading next. The smaller, tighter range inside of where timing matters and and that's where opportunity lives. When those two align, trending conditions trend to reward traders who wait for pullbacks instead of chasing price. That's exactly the environment we're seeing shaping up this morning. Good morning and welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, if you're new, take a moment to subscribe and explore the resources linked in the description below. Today's a little bit, excuse me. God damn it. Today's a little bit different this morning, guys. There is no news today, so instead of looking at Y charts, dashboard, as well as FOMC rate policy, there's no need to kind of go into that. I figured today's Friday, no new news, so we won't waste time doing that, and then we'll get right into this morning's market analysis. And again, I'll keep an eye on the chat. Good morning, William. Good morning, James. And if anybody, hopefully we'll have some time, we'll take a look at some instruments, some stocks, or whatever you guys might want to take a look at before the day's end. So if you do have something to take that you'd like me to take a look at, if I don't hit it during the session here, then put it in the chat. Anyways, let's get into the morning market analysis. As of 7:20, and again, it's 8:30, so I wrote this an hour and 10 minutes ago. We were trading at 12.25 points higher. We're right exactly where I was about an hour ago. The overnight positioning is essentially, man, I don't know what is in my throat. Excuse me. Overnight positioning has basically a flat overnight skew of 0.04% net long volume delta. And when we get to that screen, maybe we'll just kind of update that in real time and see what has changed in the last hour. Has it gotten better? Has it gotten worse? Maybe. You know, I don't know if this morning, seeing that that's what it was at 7 o'clock, even if it does get a little bit better, just to kind of give you a degree, right, of say flat, right? So you got flat, here's a spectrum, right? And then you got extreme. And then you have in here, you're going to have moderate, and then somewhere in here is light. Right? And so we're down here at flat, but even if it does one way or another skew net long or net short, we're probably still going to be, you know, light, or, you know, between flat and light. Again, flat is obviously 0, and then light is 0 to 2%, 2% to 4%. And then this is 5%. I don't know if you guys can see that on the screen, but 5% or more. These will usually be trend days. This can usually be a fade trade, because usually that inventory from the overnight will correct a little bit. So there's a, you know, either one, you can look at it as a fade and the open a little, or you can look at it as be patient, wait for a pullback, and then, right, continue the trend. Again, so we're down here at flat. So there's not a lot to take from that. So again, maybe we'll reassess in real time or not, and see what the updated skew is. But anyways, with that, we are opening in balance. And again, the 10-day average range is still sitting, you know, around, well, it's sitting exactly at 55 3/4. So again, definitely, and maybe, you know, as long as I've been trading, I'm always, you know, back in like 2016 and 17, those days were like 10 points of range in the whole day. And you would sit there for 30 minutes in a 30-minute candle, you know, thinking of auction market theory, but like, you know, 2 points in a 30-minute candle, and you were just like dying every day trading. It was just hard trading. Now it made it somewhat easy where you could add in size, right? You could trade, you know, I mean, I remember we were trading 5 to 10 contracts, because, you know, you had to, you know, really put on that kind of risk to make any kind of payday. But that was ridiculous trading back then. Just slow grinder. It made for hard days. So whenever I'm looking at these, you know, after 2018, Trump got, you know, came into office, and the market kind of, right, volatility kicked up, kind of just the average day ranges kind of opened up. I'm always going back to that anyways. I know I'm reminiscing and I'm getting off track, but just to let you guys know, if you guys, as you guys trade, and if you stay with this as a profession for 20, 30, 40 years, you will see just about everything, and some things will be burnt into your memory. So the fact that we're trading 55 points is a blessing to us traders. Because going back to those couple years of 10 points in a range was just horrid. And those memories are just burnt into your head. So with that said, price is rotating off of yesterday's pullback and gap fill, right? And so again, as we talked about yesterday, that was the classic where buyers often step back in, right? So again, how do we talk about trending markets? They do this, right? And so you break out, and then what do? You pull back. So, that's what we were looking for yesterday. Now again, and I was talking to, I don't know if Lisa and Earl's on the stream. Oh, Earl's there. Yep. Good morning, Earl. But I made a comment to Lisa yesterday. I was like, oh my God, it was just, you had to sit through the whole day. And then finally you had at the end of the day, like it came back in and filled that gap. And I was like, anyways, the stories that we have to deal with and the I don't know, the amount of patience and discipline that you will, find out about yourself is amazing. And I had to sit through that whole day waiting for that pullback and the right gap fill reversal trade, and took all day. You know what I mean? It really didn't close until the end. So anyways, from a structure standpoint, S&P futures still remain bullish, right? I'm cautiously bullish. I almost, in my notes today, was gonna put in short-term neutral, long-term bullish, but I ended up doing long-term or short-term bullish, long-term bullish in my own personal journal. But I am very carefully watching this. So yesterday's pullback did exactly what it needed to do, right? It relieved the pressure without damaging the broader trend. This morning, the intersection between those two ranges, which I'll show you guys the two ranges, is whether buyers can continue this control or if price accepts down below, right? So my trade plan today is going to center around day trade setup type 9. And we're dealing with a market that wants to trend but still requires confirmation, especially heading into the holiday weekend session. Again, I don't know if any of you guys know this, but Monday is a holiday, right? I think it's is it Martin Luther King? I don't have to look at the day. Or is it President's Day? No, it's not President's Day. I think it is. I don't know. Anyways, Monday is a closed for holiday, bank holiday. So again, this volume can thin out quickly. And right, I'm not interested in chasing strength. I want to see price move, pause, and invite late participants in before continuing. That pause is the trade, right? And so that pause is that trade. So buyers if buyers remain above yesterday's key level of 69.81, same as yesterday, right? 69.8150. Then again, pullback, stay shallow, and the controlled upside remains open, right? Anything below that 69.7050, which I feel like these two numbers have been numbers that we've been talking about all week. But when you look at the chart on a 5-day, 5-minute, you could see why those levels are important, right? Anything breaking down below that, again, there's that other range that clearly defined. There's two ranges. So there's no need to forecast or to force trades today, especially when the market clearly tells us continuation or rotation is still in play. I want to end with this recap. So, right, you want to trade the trend, respect the structure, and let the breakout pullbacks come to us. When markets trend, patience pays. When traders chase, they get trapped, right? Our job is to stay on the right side of that equation and finish the week strong. So, these are, again, this whole market analysis, I know it feels like I do it for you guys, but this is me journaling. And again, I talk about this all the time, right? So again, you just, where's the picture, right? These are everyday's journals. And this is, the things that I believe that you have to do as a trader is you have to write down your thoughts, write down what you're doing. When you do this exercise of, looking at the charts, writing down your thoughts, right? So again, this isn't, I do this to tell you, like, this whole thing necessarily isn't for you guys. I've been doing this, right? Like, forever. And I got a whole bunch of these for years. I always laugh with the kids that, maybe one of these days you can, I'll pass away and you'll have all these binders of, days of writing down morning market analyses. And I don't know how people will read those in the future, what they'll take. Maybe my kids will just, my two sons, they'll just burn them. I don't know. But anyways, I truly believe as a trader, this is just part of something that, and I usually always express leading by an example. So that's how, I don't know any other way to lead but by example. I hate hypocrites, and I can't stand hypocrisy. And so I hate it when people tell you to do something and then, right, that was something. I mean, everybody has stories and we're kids, but I remember being young and my father, smoking's bad for you, and then he's smoking like a pack a day of cigarettes. And, I just thought, like, what kind of hypocrisy is that? And again, I just think it's as a character, as a man, like, if you say something, like, do what you say. Something that, even my grandfather, I just could tell stories. And so I'm still old school in that these things. I'm hard-headed. And again, if I'm putting these together, this is what I do. I'm just telling you, like, these are things that I encourage you guys to do the same. And you'd be surprised at how doing this for yourself, right? It's fine to, like, come on here and, get, hey, what's Jason thinking? That's fine. And hopefully you learn something. But as time goes on, right, like, I shouldn't be, like, I tell the kids, like, I can't be that guy that does it for you. At some point I'm going to die, or maybe I don't do these YouTube videos no more because I just get tired of it. I mean, I did this once for a couple years and then I got tired of it and I stopped, and then I'm back on, so it's those things. So, hopefully you take that. Anyways, rant's over. I just, if somebody's here and they're struggling, hopefully this is helpful. But with that said, let's get in back to the charts. All right, back to what everybody's here for. S&P 500, right? This is a weekly chart, and Fridays are usually fairly easy for me. They're the easiest. And again, so I've back tested my own returns on a day-to-day basis, and Mondays are my worst performing day. So usually that's why I only do these on Tuesday, Wednesday, Thursday, Friday, the YouTube, because Monday that's usually if I got something to do or I got things to do in the business or anything else, private equity, the real estate, however it is, I try scheduling on Mondays so that Mondays, I don't care if I don't trade because those are my worst performing days. And then Fridays are my best performing days. So I find Fridays are really easy because it's the end of the week. The weekly profile is created. So you got 5 days of market profile, and then you can converge those into a weekly profile. And it really gives you a good idea of how the day's playing out. So Fridays, these are really easy. And again, you got the weekly bar that's going to close out. And so right now, when you look at that bar, this is, if anybody knows candlestick theory, right? This is basically indecision, right? It's a doji at the top, right? And so what we're trying to assess in real time as today plays out is, do we get this bar, right? Or do we get something that's like this? And that's what you should keep in your mind today is, as this bar concludes at 4 o'clock today, later on, what, this is the questions that you should be asking yourself, is which one of these is it, right? And so as we play out, or I guess it could also stay this way, right? And that should be the telltale. So as we go into today, right, we have structure. Let's go into the volume profile, right? We have structure as of in the now that tells us, sellers try to push it down. We closed here yesterday, right? And then we already talked about what should have happened. And then we opened up right back in here for yesterday. So if sellers were more active in the market, they would have held this and then continued lower, right? That would have been the tell. That would have been the tell that sellers were more prominent in the market. This was more distribution action, right? And that didn't happen. So if this was more of a seller's market, then that's how the price action would have played out, and that didn't happen. So what did happen is, right, this was a V bottom, right? And then we pushed up, and again, we opened up, we gap filled, right? We held the pullback, which is where we talked about where it should have been held at that 69.81, and then in the overnight now we're floating up, and again, we're going to open up, and this is that spot in which we open up, and this should go higher, right? That's the base case high probable trade, right? So that's what you should be looking. Now, if that assessment is incorrect, and this is day trade type 9, and if day trade type 9 is wrong, I shouldn't say that because day trade type 9 is actually a multi-distribution. So that's why I'm trading day trade type 9. But if there was, when we're trading distributions, there's 2 distributions I'm going to show you on the next chart. But if we're going to go into the higher distribution, right, then this needs to hold and then get sucked back up into this higher distribution, you'll see on the chart. And then if this doesn't hold, this will get sucked back down, and you're at that spot, and this will get sucked back down into this lower distribution. There's a lower distribution down in here. And again, 81, which we've talked about all week, will kind of be that, first hint if we're incorrect in the bullish thesis. And then, right, you were really wrong and confirmation wrong below that 69.71. But as of now, we have to trade the chart that's in front of us, right? So we're trading the chart in front of us and not getting too far ahead in, what's the word I want to think of? Anyways, came to me and lost it. Anyways, so I hate getting older, and right, just lost that train of thought. Just went squirrel. So anyways, so that's right, looking at this chart again. What did we talk about the other day, right? We still have this distribution node, so if this does fail, that would make sense in one way. You could make sense of it. Oh, I know what I wanted to talk to you guys too about. And let's go, before we hit the profile chart, let me go back to this dashboard. I'm sorry. And again, because I'm always, if somebody's a seller, right? I don't want somebody to get all pissy with me and, oh, Jay, you're not seeing it. Listen, we all can see, or maybe you can't, but we can see this pattern, right? And so this is a ascending wedge, right? And so again, as this gets tighter in the wedge, this is actually a bearish pattern, right? So I don't want somebody to be like, oh, Jason's always bullish. Jason always bullish. Listen, I'll be bearish when it need to be bearish, and I'll be bullish when I feel like I need to be bullish. I don't, again, if anybody knows me long enough, which most of you guys do, you guys know I could care less what direction. I'm about making money. I'm not about, telling some bullshit story. So, but this is a bearish pattern, and over time, as this squeezes, right, buyers will get fed up, and right, they'll be looking for more of a better price. I don't want to say this, right? They'll just get exhausted with the fact that these highs, you're just not really, getting your money's worth, and they'll be exhausted. And then, right, you got to also think of like a volume weighted average price as they're buying, right? The cost of, or the average, your dollar cost averaging, right, keeps on rising, but you're not getting paid. And eventually that'll get exhausted, and right, they'll start taking profit. So first, you'll just have some profit taking of old business. And then once that kind of breaks and people sniff that out, you'll have old business, right, getting concluded, which means they'll be selling their profits. But then sellers will kind of jump in here, and then that'll then bring that move way down. And again, it's still not overall the economy and the market, even though I know headlines like to subscribe to, it's so shitty out there. I don't see that. I don't see that in the data neither. But don't get me wrong, price can get ahead of itself. And so again, right, this might need to kind of take some profit taking, let the price come down, and then get in at a better price, and then, ramp it back up. I'm getting way ahead of myself. I don't want to, get too far ahead and thinking, what's happening in the future, right? We're traders day by day, week by week, not month by month. So, but I did want to point this out because I do know a lot of people, right, are screaming this market. And I would say something like, let me go back to this, same thing, like where this is kind of getting exhausted in here, where you're just not really getting it, good highs. You got that same kind of somewhat exhaustion that was here, right? And again, like here, when you think about like the tiredness, and then, right, you just kind of come in, and then you kind of come in. So this tiredness, the rollover, like they'll talk about the rollover on the highs, is a real thing. So don't get me wrong. But when we're day trading, today, we have to let that play set out. So anyways, I did just want to kind of reference that comment. Let's go to this chart here. And I am on the wrong chart. Go to the weekly profile, right? And so this is the two big distributions and ranges that I was talking about in the analysis. And you can see we're sitting right here, right? So we're sitting at 69.92. And again, it's that thing where if we're going to fall out and we take out 81, right? Then this has the potential to kind of get sucked in, and then we get sucked into this range. And again, how did we talk about then how's the candle form, right? On a weekly bar, if we get sucked into this range, the weekly bar will look like this, where we opened up, we, pierced up to the top, buyers couldn't hold, and then, right, we obviously pierced down into these lows, but then we close down here, And that's the weekly candle bar, right? Where we don't get sucked up into here, we get sucked down into this range, right? And this is where day trade setup 9 plays out, because in that setup, there is rules and clear distinction of how to look at the market to tell whether, right, it's going to go into this distribution or fall down into this distribution. And again, if day trade setup 9 plays out and then we find ourselves in this distribution, then what's that candle look like on the weekly bar, where we pierce down into these lows, right? And then we found market acceptance higher, and we're still gonna come up, and then, right, you're into this and you get sucked into here, right? And again, this distribution gets filled in, right? Or like I said, is it here? But this is where price will get sucked into. It'll either get sucked into here, and then we'll, fiddle in the middle, in and around 7,002, and right, you'll just get on a 5-minute chart, right? You're just going to get this trading action, or this will kind of fall out of bed, and then we'll dibble dabble down in here and fill this, fill that in. That's the thing to watch and assess in real time. So, again, looking at that on a 5-minute chart, how does that play out in pathing? Sorry, I'm just bringing I got to chase these crayons all around all the time. Let's do, what color do you guys want to do? Let's do blue. Right, so we already have the move up and then the pullback, right? So this is the thing, is we got the pullback already. So this was the pullback. So again, we're not looking for another pullback test of support or resistance, or right? You're not looking for that. That already happened. So what we're looking for is, right, we pulled back. That's already done. And as these market participants come in, we open up, right? And then they follow through with that. Or, right, was this market action kind of like a trap? And then this comes down. A couple of things, again, as you guys know how I look at things when we're trending, right? And I'm always, momentum trend follower. What is technically a moving average? Maybe I got to sometimes think about the basics. What is a moving average? Right? It is an average of these candles that are moving, and so it's a depicting price, right? And so when price moves and there's a trend, right, then the lagging indicator, it's lagging, is the moving average. And so when that moving average is moving up, that is a indicator telling you of a trend, right? And so, right, as that moves up, if a market is trending, then price will hold, right, that trend, and it keeps on going. Now, when the trend ends, right, you're going to get price to then do this and go through it and come back down and come back up and come back down. And then this moving average, which is a signal of trend, does this, right? And when it flatlines and does this, that's telling you that the trend is done and we're not trending, right? So when you're looking at charts, right, here tells you we're trending, and then boom, the trend is done. That tells you, like, if you're in a trending trade setup, right? And your setup is depicted on trend, not rotation, then right there, you're out. That's the trend telling you out. Now, I like to somewhat take, now this is an hourly chart, right? And that's usually where I like to kind of signal a little bit of trend. So, because sometimes on a 5 minute, 2 minute, that can get a little whipsaw, whippy. And so that's a little bit too fast. So a lot of times I'm looking at the hourly chart, and if there's a trend that's starting and intact, then this moving average will stay flowing upward. Right? Now, again, you can get a little bit some wiggles, right? There's some wiggles in here, right? Like here's a wiggle, but then it goes back up, right? But now you're completely rolled over, right? And that's the trend ending, right? So again, you can have this wiggle in here, like there's a wiggle, and then we catch it back up, and then we're kind of in a wiggle now, and then this should then catch back up because price should get back up above it, right? And then go, taking out that high, and then this moving average should confirm that we're trending. Now, if price, and we're going to come down into that lower distribution, then this should hold, right? And then price roll over, and then this rolls over with it, similar to back in here, right? And then that tells you, like, boom, the trend, we're not trending. And, you may not want to, or a lower probability of success of, right, prices moving higher. And again, we just get stuck into this range that we've been trading for, since last Tuesday. And that's the things that you should be, some little indicators and signaling of what's going on. So again, as we open up in half an hour, what I'd really like to see is this is fine, a little undercut of the moving average. These undercuts are fine. These are buying opportunities. But then we should get back up fairly quickly, right? Because the more time we spend down here doing this or going down, this moving average is then rolling over, right? And that's not what we want to see. What we'd like to see is, getting into a position, this, right, this pattern right here, you want to see confirmation that that's it. And if that's the case, if this was the hold the pullback, then this should then like kind of move and we should break out of this high, right? Like we should be doing this. So again, this needs to like get back above the moving average. The trend should stay intact, and then this move out. If not, then, right, this rolls over, and then again, that day trade type 9 setup, type 9 it plays intact. And one thing, let's go back to the dashboard, and I want to look at one other thing just to kind of, right, reference. This is 5 days of trading, right? And again, the Vold, right, is holding up positive, holding up positive, holding up positive, right? The only kind of somewhat bearish day was Tuesday, right? And Tuesday where CPI came out, we broke above and then they pulled back a little bit. But again, you still didn't get into major selling, right? So here's the right trending bearish days or trending bullish days, right? And you didn't even get, the low was negative. Oh, what do we got here? 83 million, to the negative. And that's it. So, we, again, even though on Wednesday, right, we had that kind of swoosh down. I talked about this. I thought I talked about this. You still had like that, end of the day kind of bullish presence. Your ADSPD never went negative on that Wednesday. And again, here's Thursday and 121 right? Advancers minus decliners, there was more advancers, 121 more than decliners in the S&P 500. So again, not as bearish as what one might, you know. And again, I keep on using the if then. If it was more bearish, these indicators under the hood would represent that bearishness, right? This is where you're not telling yourself a story, right? People are putting their money where their mouth is, and you would see that in price action, in the VOLD, in the ADSPD, in the tick. So until, right, we get confirmation as traders, your, what do I always say? Your assignment, right? There's always that joke of, XYZ understood the assignment. Your assignment is not to, kind of forecast, but it's to, read the data that is right in front of your face and analyzing what is there, not what you want it to be there, but what is there truly. You know what I mean? And check yourself on your cognizant dissonance. So anyways, hopefully that's helpful. As always, learn, trade, profit. If you are near Myrtle Beach, right, come check us out at the office. Here's a phone number down here. Here's our address, 100 Sutter Drive, Suite 101. Email us if you want to email us with any questions. Here's the day trading website. Here's our the firm's, the mother company, the firm's website, private equity, finance, real estate, obviously day trading. And come check us out. Come see us in person. With that said, as always, learn, trade, profit, and I will see you guys Tuesday. Take it easy. Have a good weekend.